Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a continuation of yesterday afternoon sell-off, which resulted in the market moving down into the 82 to 84 half area where buyers were active on first test. And at this point, heading into the open, our intermediate term bias is bearish and the short-term bias is going to be neutral bearish. And the main question today is going to be whether this balance breakdown attempt is going to be successful and lead to follow through on the downside. So we know that the sellers are in control, but in order for the sell side to maintain control, we will need to see continued broad market weakness and sustained downside momentum in real time. And simply a lack of weakness or lack of continued downside momentum at one of these support zones can attract buyers, and then from there the market can balance within a range. On the upside, we have pre-market resistance at 92 to 94, and continuing to hold below that zone would tell us that we're dealing with a pretty weak market. Above that, we have the initial resistance zone at 97.5 to 2800.5, followed by 2805 to 2807, and sellers can be active at both of those zones, and a breakout above 2805 to 2807 would signal that the buyers are now stepping in a more significant way. As long as the market's holding below pre-market resistance or initial resistance, we know that the sell side is in control. Our short-term bias favors the sellers, and our intermediate-term bias is clearly bearish. So by default, we are going to give more edge to the sell side and exercise caution on the long side. And the only reason that our short-term bias is neutral bearish as opposed to clearly bearish is that today marks a balance breakdown attempt, and the market is now getting a bit overextended to the downside, and that alone can attract responsive buyers at one of these support zones. And that's why we need to have the understanding that the sell side is in control, but we don't want to get overly aggressive on the short side as the market is testing support if in real time we're not seeing continued bearishness and sustained downside momentum. So if the real-time conditions are bearish, then our bias already supports the downside, and a break below initial support could quite easily result in a move down into 73.5 to 76.5. And bigger picture, if this is a successful balance breakdown, then the market could expand the range down into 27.66 to 69. But in order for that to happen, we do need to see that continued downward momentum, and just understand that because the market is getting a bit overdone to the downside, buyers can be active at any of the support areas below, especially if the market moves very quickly into one of these support areas below. In that scenario, there is potential for intraday bounces. So that is the market context heading into the open. Let's see if the sell side can maintain the control that we've seen here in the overnight session, and we'll take it from there.